Alright, let's talk about one of the most talked about numbers in the stock market, the P/E ratio. If you've ever read anything about stocks, you've seen this term pop up. But what does it mean, and why do investors care so much? So, P/E stands for price to earnings. It's a simple formula. You take the current price of a company's stock and divide it by its earnings per share. For example, if a company's stock is trading at $100 and its earnings per share over the past year were $5, then the P/E ratio is 20. That's it. The stock price divided by earnings per share. But what does that actually tell you? Think about it like this. The P/E ratio tells you how much investors are willing to pay today for $1 of a company's earnings. In our example, a P/E of 20 means investors will pay $20 for every $1 the company earned in the last year. It's like saying, I'm willing to buy a lemonade stand for 20 times what it made last summer. Now, a high P/E ratio usually means people expect big things from the company. They think earnings will grow fast. It's like paying extra for a lemonade stand because you think it'll be a soda empire next year. But a low P/E might mean people aren't so sure about the future, or maybe the business is just boring. Sometimes, though, a low P/E can signal a bargain if the business is healthy and steady. But here's the twist. P/E ratios don't tell the whole story. Some industries, like tech, tend to have higher P/E ratios because investors expect huge growth. Others, like utilities, are lower, since growth is slow and steady. So, always compare a company's P/E to others in the same industry. And remember, sometimes companies have no earnings. Maybe they're new or had a rough year. In that case, the P/E ratio doesn't really work, so be careful. So, to sum up, the P/E ratio is a quick way to tell if a stock is expensive or cheap compared to its earnings. But it's just one piece of the puzzle. Always look at the bigger picture before making any investment decisions. Thanks for watching, and don't forget to subscribe for more simple explanations that help you master your money.